Hi, it's me, I'm back. This is the US Futures weekly chart analysis for the week ending 17th of November 2023. Thanks for tuning in. Okay, first chart, as usual, is the US dollar index futures. We suggested last week that price was looking a little vulnerable and it might head down and test the 104 level for strength. That's pretty much what's happened. And that's allowed a tailwind to form on many of the associated markets, which have pushed higher in response. Now, there was the highs of the range. You can see the market had struggled over time to push through. It did appear that it might push through, particularly on this bar here, but it failed in the end. Price pulled back. You can see here a little shelf was formed, which was broken this week, and prices come down to test around the 104 level. Now, there's some previous consolidation around 104. It's just in there. Doesn't really look like much, but these two bars together were effectively 2 weeks of consolidation, a push higher and a week of consolidation there. If you look back, price really accelerated lower here, then made its way back. This week here was an absorption bar right at this level. Then price pushed higher for 3 weeks and then consolidated for a week. And there is previous support in the background at this level, and that's what you would expect the market's testing here at the moment. So I would sort of expect a bar that looks something like this in response next week, a bar that moves lower, finds some sort of support drawn out and closes off its low with a narrower spread and probably with reduced volume. If the market continues lower, the next level is around this 102 or just below, adjacent to this consolidation here. So I would expect some attempt for the market to find some support this week. No guarantees it'll be successful, but I would expect the market to attempt to draw out some support. We'll see how it goes. Next chart is the E-mini S&P. This is S&P 500 index futures. We suggested that the market might push up higher this week, and it's moved up adjacent to these little highs here. It was a nice move on reduced volume. That suggests that selling pressure was relatively low this week, and that allowed price to move higher in response. Now, there's no reason for this market to test for supply next week. You can see down here that very little supply has been drawn out over the last 2 weeks. However, markets do like, after the weekend, to produce a little test for supply, just to check and see if there's any sellers in the market. So often after the weekend, there's a little test for supply soon after the open, especially if the market's not overly strong, just below the previous close, like these two bars here, before price pushes higher or attempts to push higher. You can see it was more an attempt here. It was a certain push higher here. So I would expect something like that next week, and I would expect price to come up and at least look at the 4,600 level. Now, if it's really strong, which would mean that the US dollar is probably weak, then it'll push a little higher. Perhaps you'll get a bar that looks more like this. A little test for supply below the previous close, a push higher, and then a drift back towards the end of the week to close just below the 4,600 level. That would be an ideal bar. We'll see what we get. US Treasury 10-year note futures. We saw lows forming down here and mentioned it at the time. Now you've got an important level that comes through here. You can see how the market's responded to that line or that level at the 110. We've mentioned it many times in the past. There's a complex low formed through here, the lows of those two bars. You can see that's caught the market up at the moment. prices pushed up to it and it hasn't pushed through. This was a nice push higher. The market came back with a reduced spread and reduced volume, showing you that selling pressure was low. Price had another crack at this level this week, but it hasn't really pushed through on an increase in volume. So there is some supply being drawn out from the left here, and it may take a little bit of extra time and effort for the market to push through that level. It's obviously causing some issues. What trading has gone on so far will have weakened that somewhat. We'll just have to see how it goes forward next week in particular. But look for another early test for supply and then an attempt to push higher, perhaps in a grinding fashion, so you'll get the market trading sort of like this through that level, at least initially. Copper price futures. Copper price futures had excessive volume the previous week on this bar here. I mentioned it at the time, and I was uncertain as to whether that would be inferring weakness because it was a threatening down bar. You can see all this trading here is in the shadow of the lows of the range through here. This is in the shadow of the lows of the range. And this was a threatening down bar on increased volume, but the spread and the volume weren't evenly matched. There was a effort reward error there, and that suggested that it was excessive volume and perhaps the market might instead reverse. You can see that's exactly what's happened this week, which suggests that buying support was actually coming in on this bar, and then the market has bought the market up this week. You've got a minor level through there, and I won't be surprised if the market does continue up to that level this week. I don't think it's going any higher than that for next week. The highs of the range come through here just below 4, but I think this level here at around 3.8 is a likely target point in the near term. There's no doubt that some buying support has come in on these last two bars. Volume is excessive on both bars, really. So you'll probably see some testing for supply early in the week, and that'll look something like this. You'll see the market come back, but with a reduced spread, and then close back up near the highs, hopefully on reduced volume. So volume will probably be like this. If that's what you get by Wednesday, and selling pressure appears low, then the opportunity may be there for the market just to pop up towards this 3.8 level towards the end of the week. Now, if supply is drawn out, you'll probably find another down bar, another more threatening down bar will form, something like this, but hopefully this time volume will be lower, and that'll show you that selling pressure has reduced, and then the market will pop up in the following week. So it's just a little bit of extra work the market needs to do to complete the process of buying and then absorbing all the sellers that have been drawn out. Gold price futures. Gold price futures were in a similar situation to the copper price futures, unsurprisingly, this week. There's the lows of the range. Now, there is a shakeout over 3 bars here, and it responded positively. The market sort of stalled out here. You've got the highs of the range sort of coming through here, like that, and the market did stall out, ran out a bit of fuel there, and it needed to come back, test the highs of the shakeout through here, and volume was drawn out. I expect that was probably hidden buying support. In hindsight, you could say that, a bit like the copper market, and then prices pushed higher this week on reduced volume, and it pushed higher this week on reduced volume because selling pressure was low. What sellers were present in the market were probably bought or absorbed on this bar, and that allowed the market to effectively float higher on reduced selling pressure this week, back up to the highs of the range. Now, the opportunity is going to be there for the market to push higher. This has been a difficult level for the market to crack over recent times. So we'll just have to see how the market plays out. You may see a tentative attempt to push higher like this, and then price spending a little bit more time around this level to absorb supply before there is a serious attempt to push higher. The other option is for the market to really accelerate higher, but that seems less likely in the market. It does happen from time to time, but it's less likely to happen in this market. It's a really big market. It's difficult for that to occur and get everyone on the same side all at once. Silver price futures, lows of the range come through here. It doesn't really have a proper multi-bar shakeout like gold does. The gold one kind of came through here, I think, and this is a bit awkward. Doesn't look quite right. You could suggest it is, but you might be pushing it a little bit. Volume was excessive the last 2 weeks. In fact, it was increased this week as price pushed higher with a wide spread. Bit of enthusiasm in the market, pushing above this little minor high here. And to close above that level is a positive for sure. Because supply was really strong, or because volume was really strong this week, there's a big chance you'll see a test for supply early in the week, just to make sure that selling pressure isn't too strong. And it'll look like something like that. If that's what you get by midweek and volume is low, then the market may attempt to push higher in response. If this is what you get and supply is being drawn out and the close is actually down here, you'll probably see the market continue to trade below the previous close for a little bit longer while it absorbs supply sort of in there. Like crude price futures have broken down pretty badly over the last couple of weeks. It was a bit surprising that more support wasn't drawn out adjacent to this level here. Anyway, price pulled back. You've got the highs of this important period of absorption going on here. The price has come back to that and found some support drawn out with the close off the lows this week. There was an attempt this week for the market to push higher here, but that failed and price then moved lower, and that's more than likely why price pushed all the way down here before buying support came in adjacent to this period of consolidation to the left. So I would expect an attempt for the market to draw out further support adjacent to this 75 level, just above, just below. If there is further weakness adjacent to this period of consolidation between 70 and 75, and try to draw out some support and build a little base from which the market can then push away from again in the future. Euro, US dollar currency futures. You've got an important low of the range coming through here. You've got a little shelf that formed here and then another one there. You can see them when they're marked in quite easily. Price did find a bottom here, and we saw the market accelerate higher on an increase in volume, then pull back with a very narrow spread on below average volume, showing you that selling pressure was low. And this week, with the weakness in the US dollar, the market really accelerated higher, almost up to the highs of the range here. Now, volume really wasn't excessive this week, but I do expect the US dollar will attempt to find some support at its current level. So you may get one of those awkward looking bars like this in response next week, where the market makes some sort of attempt to move higher, but it's not convincing. And when it tries to move lower, there's no real selling pressure, and it ends up closing somewhere in the middle. To a reasonable extent, this market will trade the inverse of the US dollar, but it does trade on its own fundamentals combined with that. So we've had a good run higher. We're up to the lows of the range here. We're up to this range here, and I won't be surprised to see the market just stall a bit here, perhaps around the 110 or just below, and do some work in absorption mode for a little while. British pound currency futures, very similar to the euro in some respects, but not quite as strong. There's the lows of the range that we look at. Here's that little shelf, and the next one comes through there, and the market didn't push up. The euro's up at this level. The market didn't quite reach that level this week, so it's a little bit weaker. Similar though, there was some bottoming action through here. Price pushed higher on an increase in volume and above the highs of the range at the time. Price came back with a reduced spread, but wider than the euro on reduced volume, but higher than the euro. So there's a little bit more weakness there before price pushed higher this week. Now it does look more like this market's going to attempt to grind more than accelerate higher, perhaps something like that. And you'll see the market then move up and down within this range and grind higher rather than really accelerate higher. Aussie dollar currency futures. We've got the near-term lows of the range come through here, and all this dipping below really corresponds nicely with these longer-term lows of the range. This is a previous support zone through here, and that's what the market's done. It's moved into this zone, found some support developing, and has pushed out, similar to the other two markets when the weakness was emerging on the US dollar. And look how far this market came back, albeit on reduced volume. The euro only came back, say, this far, and the British pound came back this far, but the Aussie came all the way back to the lows of the range, which are there, and has attempted to push higher this week. The other two markets have moved above this bar's high, and this market remains adjacent to it. So it's trading a little weaker than those other two markets, there's no doubt. That's the range above, and we're trading in between the two important levels at the moment, sort of trying to find some decent support. I thought this market might actually move up a bit stronger this week, but the response hasn't been particularly strong, and that might reflect how weak the market was on this bar here, on this down bar, was much weaker than anticipated. That should have had a much reduced spread and lower volume, really, and it didn't, which shows you that there was some supply in the market, and that's caused issues when prices attempted to move higher in response this week. Bitcoin futures. Bitcoin futures are trading in absorption mode at the moment, which is understandable considering its position. We just draw in the chart. There's a period of accumulation through here. Here was the breakout bar. Price broke out, traded adjacent to this congestion here, came back and tested for strength, attempted to push higher again, came back a second time, and now price has moved above all of that congestion and really accelerated higher here. I'm anticipating there to be some pretty determined resistance in this level, some selling pressure will emerge, and that's pretty much what we've seen so far. Price has moved up into this level with a bit of intent, but since then the market's moved into absorption mode for 3 weeks. It's pushed up and closed low, a classic absorption bar in response to a little push higher, and then you've had a tentative push into the zone of resistance on an increase but only average volume, and this week the market's traded within that zone, closed right at the lows of the zone on reduced volume, which suggests that selling pressure has reduced this week, but I'm expecting this to be a bit of a grind through here. I'm not anticipating that the market will be able to accelerate higher. It may attempt to, but then be pushed back down again, and it'll do something like this. I'm expecting this to be a bit of a grind between 36 and 45,000. So we'll see what we get. That's what it looks like at the moment. There is definitely a lot of old trading to the left up here, and I would expect that there's a fair bit of supply being trapped up there, which will likely need absorbing. We'll have to wait and see for sure. You can only anticipate these things and then see what the response is. But at this point, I do expect there'll be at least some increased selling pressure emerge from the left. Price hasn't been at these levels for quite some time now, and there'll be some trapped supply over there that'll be waiting to get out, and that'll cause resistance as price attempts to move higher. Okay, back to the US dollar index futures just quickly, because this market plays such a large part in many of the other associated markets. You can see that price broke down below this little congestion zone here, which formed at the highs of the range here. Price just wasn't able to break out. Price broke down. There is this very small period of congestion here, which will offer some support around 104. Barring that, you've got this period here where a low formed between 100 and 102, and that's where the market will head to if it can't draw out sufficient support around the 104. So it's pretty important what the market does this week. I'm expecting the price bar to look something like that in response, and it'll depend how much supply is drawn out as to whether the market can then bounce from there, or whether the selling pressure is ongoing and overwhelming and pushes price back down to 102. But I'm looking for an attempt by the market to draw out support around the 104 this week, and then from there we'll be able to get a better gauge as to what the response to that will be. And it will depend to a large extent on how much supply is actually drawn out this week. Okay, thanks for your time. Good to be back. See you again next week. See ya.